Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's check in with Aneeka Gupta. She's the director of Macroeconomic Research at WisdomTree. Aneeka, as you sit back here and think about these markets here, what are some of the key drivers for you? Is it the Fed? Is it the economy? Is it corporate earnings? What are you thinking about here?
I think it's a combination of the three. I think we've moved from this Goldilocks period of progress on disinflation, helping to drive further monetary easing, and I think that's taken a bit of a stop, especially in the U.S. since we've received much stronger economic data. We're now beginning to see that benefit from lower risk premia being offset by rising bond yields. And that's based essentially because investors are now reducing the amount of expected Fed rate cuts. And that's having an impact on equity markets. And obviously the market does also remain on tender hooks because we have the upcoming US elections. And they're trying to figure out whether these improving odds of a Trump victory actually do come to fruition.
No shortage of things for investors to worry about, Aneeka. And at the top of the show, so Paul mentioned that gold has come in a little bit, but still at 27.33. We've seen it hit records here almost day after day. How are you thinking about gold, and what do you see as driving that asset? Is it simply maybe not fear, but concern about the election outcome? Is it something more than that?
Over the past month, we've seen a strong, discorrelation between the US dollar and gold alongside real yields and gold. So despite the fact that the dollar has strengthened, despite the fact that real yields have increased, gold still continues to attain multiple record highs. And that's because we're seeing a lot of strength on the physical market. So we're actually seeing central banks increase their purchases of gold. We're seeing, investors increase their purchases in gold. And that's been, one of the big drivers. Now, since the Russia-Ukraine war, we actually saw flows into gold-linked ETFs decline. But since June, we've had about 13 consecutive weeks of inflows into gold-related ETFs actually increase. So that's been a new catalyst in the horizon driving gold prices. And I think the overarching reason for why investors are, flocking towards gold is primarily because of rising geopolitical risks, with the tensions in the Middle East still not looking like they've subsided. And at the same time, we have, the US elections, the upcoming US elections, and that is also, triggering a lot of volatility.
All right, so let's focus on the U.S. equity market, Aneeka. We've seen this a market that's been kind of driven by, great performance out of a handful of stocks called the Magnificent Seven and so on and so forth. There's a lot of folks that say that that's not really healthy for the market. Are you concerned about that lack of breadth, or how do you think about this U.S. equity markets just in general?
Yeah, we still remain positive. We expect, obviously the bar has been lowered for Q3 earnings season. We're now looking at average earnings growth of around 4%. However, if we look ahead, a lot of that margin expansion for the S&P 500 is primarily being driven by the technology sector as well as the communication sector. I mean, for technology, it's accounting for around 18% earnings growth for 2025 and 15% for communication services. So they are going to be the key drivers for earnings going forward. And I think given the fact that the bar is already so low for Q3, we expect, quite a few companies to actually meet or exceed that bar, which should drive performance higher.
We've listened to a lot of interviews this week from our colleagues in Washington as the IMF and World Bank meetings take place, and Christine Lagarde, the ECB president, was one of them who came through our studios and spoke with Francine Lacqua. And something that she said President Lagarde said is that she's confident in the direction the ECB is taking here, given what we're seeing in Germany and Italy. Germany on pace for yet another year of contraction. Are there opportunities in Europe right now, and where do you see them? Are there equities opportunities in Europe as you see them?
Absolutely. I think the pessimism towards Europe is overstated. We already saw the IFO numbers today for Germany, show a slight upward trajectory, very different from what we've been seeing over the past few months for the greater part of this year. The key opportunity right now is in the small cap segment for European equities. That's because earnings for European small caps, and within the small caps, primarily a tilt towards a value, is showing more than a 16% earnings growth rise over the prior year. And if you compare that to MSCI Europe, which is representing more of the large cap segment of the market, we're looking at earnings expectation actually down 8%. So the opportunity is primarily in the small cap space, tilted towards more value oriented sectors, and that's because the small caps were the most penalized when rates rose at such a sharp pace. And now that we're going to see a much sharper unwind of easing from Europe as opposed to the US, that's going to asymmetrically benefit the smaller cap segment of the market in comparison to the large cap.
Aneeka, thank you so much for joining us. Really appreciate getting a few minutes of your time. Aneeka Gupta, she's the director of Macroeconomic Research for the equities and commodities business at WisdomTree. She is in London, 1 King William Street, which is literally right around the corner from the Bloomberg headquarters in London at Queen Victoria Street.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joe Mathieu joins us here, Balance of Power host. He's down in Washington, D.C. He is hip deep in all that is going on both of these campaigns here. Joe, it looks like the Democrats are kind of trying to rely on some star power. But for me, I was just mentioning to David Gura, Joe, the star power thing, whether it's my boy Bruce Springsteen or whether it's Beyonce, I mean, does that even, it's almost like that's so 1990s or 2000s. I mean, is that even relevant anymore, do you think?
Well, I guess it depends who you invite, but there's no evidence to suggest that celebrity endorsements move the needle when it comes to polling. But look, we're in a tied race. You saw Bloomberg's swing state survey yesterday, 49-49. Did you see today, Siena College, New York Times, 48-48. This is as tied up as it gets. So the campaigns are trying anything they can. And yeah, Kamala Harris is surrounding herself with some pretty heavy celebrity. Willie Nelson's going to be up there tonight as well. He had a big cannabis for Kamala thing the other. I don't know if that helps either, but
no surprise there. Yeah,
no surprise at all. Donald Trump is doing it himself, right? You got Eminem for Kamala Harris. You got Kid Rock for Donald Trump. He's going to be with Joe Rogan. He was with Tucker Carlson the night before. Everybody's grabbing whomever they think has an audience. That goes for influencers and all these podcasters getting interviews because they're flailing, guys. They're throwing whatever they can at the wall to try to beat each other by what will be probably less than a point if these polls are true.
Joe, let's talk a bit about the rally that was held in Atlanta yesterday. So yes, Bruce Springsteen was there. President Obama was there as well with Kamala Harris, the first time the two of them appeared on the trail together. The campaign saying this is the largest crowd that they've had for a rally yet. I think 23,000 people in that venue. What was the message? What is the message from the Harris campaign? Let's start there with 11 days to go until Election Day. Is it simply focused on making sure you get to the polls, but more so than that, voting early if you can?
There's a lot of that. And, look, there's I don't know that they have crystallized a closing message. Both sides have really just been kind of shooting from the hip, and we've seen these messages evolving. Here's the best I'll do for you. What we're hearing from the Harris campaign. He has an enemies list. We have a to-do list. That's one we're hearing a lot about. But also, going back to this threat to democracy idea that Joe Biden, frankly, never really connected on. And a lot of people are wondering why Kamala Harris isn't talking more about the economy than democracy. She's going to be back in Washington next week, 1 week before the election on Tuesday, standing on the ellipse, where we all remember Donald Trump holding that speech and that rally on January 6th to try to bring people back to that moment. So I think there are a lot of different closing arguments. coming from both campaigns. Last night, Tyler Perry, Samuel L. Jackson, Spike Lee, I could keep going with the names. They all got up to the podium to reinforce those points.
Joe, a lot of folks are saying that what's going to be really key to this election is getting out the vote and participation. What do we know about maybe turnout? What do we think turnout's going to be in this election?
Probably an all-time high based on what we're seeing. The campaign certainly hopes so. And I'm saying that because of just the incredible closeness in the race, the amount of engagement that we're seeing, but also the early voting has been setting records. And it's been setting records in states that have not always been, fully leaning into early voting, with Republicans specifically in states like Arizona pulling ballots more often than Democrats are. So there's a bit of noise out there, but I can tell you guys, people are voting early in person, by absentee, by mail. And that's also going to be a big reason why we have to wait a long time before this race is called. I mean, we're really going out of our way to warn our viewers and listeners that it could be days, if not a week, before we know. Wow.
Joe, we've talked a lot about the role Elon Musk is playing in Pennsylvania in particular, and there was this blockbuster piece in the Wall Street Journal that dropped last night indicating that Elon Musk has talked repeatedly, continues to talk, I think it alleged, with Vladimir Putin, the president of Russia. Walk us through the implications of that. So we've got Elon Musk, who's reportedly in regular contact with the Russian president, Donald Trump, who's reportedly in regular contact with the Russian president. And I don't need the reportedly here when I say that these two men are talking to each other all the time, Elon Musk and Donald Trump are. Walk us through why this is such a significant story. Again, this is something the Journal has reported. We haven't confirmed, but certainly made some seismic waves over the course of the night.
Well, look, I mean, goes back to what Donald Trump likes to call Russia, 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 suggesting that this was all a hoax, the idea that he was colluding somehow with Russia or Vladimir Putin, or at least enjoying the benefits of some interference. We know that his relationship is something that has rubbed people the wrong way. He says that it's a good thing, that it in fact strengthens our nation to have a leader with relationships with other world leaders. But look, we don't really have to go to the degrees of separation here. If it's Elon Musk, Donald Trump, and Vladimir Putin in a triangle of communication, that's a big deal. Elon Musk, according to these reports, in fact, was asked to do a favor by Vladimir Putin and not turn on the Starlink satellite service over Taiwan as a favor to Xi Jinping. So, it's not like they're trading recipes on the phone here, guys. This actually could have major geopolitical implications.
Wow. What do we know, Joe, about down ballot? I'm kind of thinking about, we really have to get a handle on who's going to be in the House, who's going to be in the Senate. What's the thinking within D.C. these days?
The conventional wisdom for some time, and I don't think it's any different right now, is that the Senate flips from Democrat to Republican, the House flips from Republican to Democrat, and then we'll see what happens in the White House. Okay. Both are, of course, dealing with such thin majorities that it wouldn't take a lot for either to happen. This is a tough map for Democrats in the Senate this year. There's some very difficult races when you look across the swing states in particular, whether we're talking about Pennsylvania. Ohio's a big one with Sherrod Brown. Wisconsin, the Senate race has us wondering if Democrats can keep the majority. The House, it would take 4 seats essentially to flip here, but it's going to take some time. We might actually know the Senate on election night, and I don't want to predict that, but there's a good chance that we will, or the following morning. The House is going to take some time. It's states like New York, and more specifically states out west, California, that are going to take probably days to count. And when we're only talking about a couple of seats here, it's ironic to think that we will have to wait days to know who controls the House of Representatives. But look, we're coming up to New York, guys. I don't think they're letting us go home until all this stuff is called. So we're going to experience this together.
Paul, Joe bringing up that Senate race in Ohio, and just the amount of money that's been poured into that race in particular is just so extraordinary. I think we've become kind of inured to how much money is fueling all of these campaigns and races. Joe, you mentioned you're coming to New York. Donald Trump is coming here as well on Sunday. He's going to be at Madison Square Garden. Elon Musk reportedly is going to be there as well. We've talked a lot about the Harris messaging that we heard in Atlanta, that we're going to hear in Houston, where she goes today. What has his messaging been? And so you mentioned those House races here in New York. My guess, my sense is that's aside from the ego boost of playing Madison Square Garden for Donald Trump, that's the importance of him coming here to kind of see if he can wrest some of those House seats away from Democrats in New York.
Well, that's one way to look at it. I'm not sure that has any reason to do with why he's actually going. To your point, he wanted to play Madison Square Garden. And look, it might be a smart strategy. He's going to get all kinds of coverage. Yeah, Elon will be there, even Mike Johnson on stage. Can you imagine a year ago telling Mike Johnson he was going to be
Double
playing
billing.
Madison
That's
Square Garden.
That's something else,
But yeah, it's a big deal. I don't look, I keep conjuring up images of Led Zeppelin, and I think I'm showing my age here because nobody I sit with in my row has ever heard of the song Remains the Same. And they keep telling me, no, it's Billy Joel. He wants to be Billy Joel. Everybody wants to play Madison Square Garden. So they're going to pay $1 million to do it, by the way. They're basically renting the place out. And I'll be honest, with the amount of coverage that will probably generate, I suspect it'd be worth a lot more than $1 million. So maybe it's not that silly.
Not bad. Playing the Garden. Why not? Joe Mathieu, thank you so much. Joe Mathieu, he is the host of Balance of Power. He is in Washington, D.C. He is right in the middle of it. We appreciate getting a few minutes of his time.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Back in the day when I was a sell-side analyst, he went to Boston 3-4 times a year to shill for your II votes, which I got, by the way. I owned that town for a long time. One of the places you went was Wellington Management. I mean, solid, old money, crusty New York money. That's where you went. Some smart people there. I never got off on the fixed income floor. I went straight to the equity floor.
Elevator didn't stop there.
Yeah, no, that's too much math. Brij Khurana joins us. He's a senior managing director, and he's a fixed income portfolio manager at Wellington Management. Hey, Brij, is our Federal Reserve going to cut interest rates in November? Because I'm looking at some of this economic data, even like the industrial production numbers that came out today, pretty solid across the board. What do you think our Fed's going to do?
Thanks for having me back. Yeah, I do think they are going to cut about another 25 basis points in November. Why has the Fed changed its rhetoric to focus so much on the unemployment rate from focusing on inflation? I really think it comes from their change in view. They have this line that they've been repeating quite often, that the labor market is not the source of the inflation in the economy. And that is their biggest fear, because that's what the 1970s was about, the wage price spiral. And now they don't believe, and they're right about that, I think, that the leads speak to the labor market not being the reason we have inflation in the economy. And that means that they can go back to their pre-COVID policy of targeting the neutral rate for the economy, which they think is about 3%. That's the level where they don't think policy is expansionary. They don't think it's contractionary. And they're looking at the economy and they say, look, interest rates are at 5%. We think 3% is neutral. We have a lot of room to cut, and we're still in restrictive territory. So I think they're going to continue along this path with that 25 basis point cut.
For a neophyte like myself who has heard of R-star but just doesn't understand the intricacies of it, how difficult is it for them to target this, and how much disagreement is there among policymakers on that committee about what it is?
So it's very hard to know. You only know when you're either
not
above
in
it
real
or below
time,
it, right? You don't know in real time. What you can do is you can look at their estimates. So you go to that dot plot that we all talk about, look at where their long-term dot is. It's around 3%. And there's actually a lot of, that's the spot where there's most consensus on. So they think it's around 3%. But I don't think that really matters, whether or not it's 3, 3.5, or 2.5. The point is that they're at 5, and they're dealing with an inflation story which is less pronounced than it was 2 years ago. And so they're basically saying, okay, maybe it's 3.5. Let's see what the economy looks like when we get down to that 3.5 level. If it's still accelerating at that point, then yes, maybe the neutral rate is higher. But we just know that we're much higher than that at this point.
All right. So if I'm in the fixed income business today, I don't know. I don't have to be a rock star. I can sit in a 2-year treasury and get.
You could get off on that floor.
I can get off on that floor and say, "Hey, kids, I'm long the 2-year treasury. I'm clipping a 4.05% coupon. Should I just do that, or should I take some credit risk?"
Yeah, I mean, I do think that I think bonds are attractive. I do think that when you look at credit spreads, they are quite tight right now. So investment grade spreads, looking at the Bloomberg indices, less than 100 basis points, high yield spreads below 300 basis points. That is not a lot of compensation for the risks that are out there. I mean, we are in the first quintile of spreads, and historically over the next 3 to 4 years, that does mean negative excess returns for credit sectors. And I do think we actually are seeing defaults and the distressed exchange ratio, which is basically when your bonds get primed by other borrowers. And so, we're seeing that increase. It's around 5.6% right now, which is actually quite high. And so, relative to defaults and recovery rates, we don't really feel you're being compensated very handsomely right now in credit markets.
Let me go negative here and say, were things to take a turn, were we to get this kind of phantom deep downturn or recession, how well equipped is the Federal Reserve to deal with that at this point in time? When you look at sort of the policies that they've put in place, certainly the amount of assets that they bought as well. They're beginning to unwind. Should we be worried about what tools remain in the Fed's toolkit?
I mean, I think given where the starting point of policy rates is, they have a lot of tools. I do think that this cycle is going to be different if we do enter that downturn, in that I think as much as they're going to continue to use interest rates as the primary tool to which they change monetary policy, I think they're going to be loath to use the balance sheet as aggressively as they did after COVID. And so, I think if there is a problem in the Treasury market, I do think they'll come in and buy bonds like they did in March 2020. But I think they were roundly criticized for buying so many agency mortgage-backed securities after COVID and thereafter. And so I don't think they're going to be doing that the next round. And I do think that is an important point, though. We have been in this Goldilocks type environment, and we don't think about what's coming up. But if we do enter a recession, the Fed is not going to be as aggressive as we've seen after the GFC or after COVID. And so, credit investors should keep that in mind, that the tail is not as clipped as you may think.
September was I think the biggest month for investment grade new issuance on record. All the banks have been flooding into the market with new issues. If I'm a bond salesman at like Morgan Stanley or JP Morgan, are you guys at the top of my call list? Do you buy new issue stuff? I mean, you're Wellington. Or do I just go to all the hedge funds to buy this new stuff?
I mean, we're definitely a large asset manager, and so we certainly, do buy the IG corporate market. I do think it is interesting that we kind of entered this year thinking that net issuance, so this is not only issuance, but it's also versus redemptions,
right,
was going to be on the lighter side. We were kind of thinking 400 to 500 billion, and that was going to be kind of a tailwind to credit markets because you just have less supply than we've seen over the last few years. I've just been almost surprised by how much issuance we've seen. I think gross is 1.2, 1.3 trillion, and even net issuance is kind of 600 billion-ish. And so it definitely, I've been surprised by two things. One, the amount of supply we've seen in the investment grade corporate market, but just kind of the ravenous nature with which everyone's taking it down. Its supply almost causes spreads to tighten, not widen.
Every book I see for these things, I don't care if it's Purina Cat Chow or JP Morgan, these things are oversubscribed multiple times in a bond market. I mean, I expect that for one of my IPOs back in the day because I was a great syndicate salesman. But fixed investment grade debt?
Yeah, it is interesting. I think what people are really focusing on is the high level of yields compared to the level of spreads.
Yep.
That's what we constantly hear. Well, spreads are tight, but yields are high on a long-term basis. I do think that people are very focused on income right now, and in fixed income focus on the income part. I don't think people should really forget about the total return nature of fixed income, though, as well. And I think we're talking a lot about the election these days, as I'm sure you all are. And I think in this, the market's really pricing in a large percentage of some kind of sweep. I think we should also think about the other tail, though. What if we get divided government? And in a divided government, you get that fiscal tightening, you get perhaps slowing economic growth than we've had over the last few years, and that's an environment where bond yields could actually fall a lot more than people think. And so you don't want to also forget the other side where bond yields could fall.
Let me ask you one other question kind of tied to the election, and we've heard Donald Trump say he'd like to advise the Fed chair, give him his opinion on whether rates should go up or down. Going into the interview that he did with our editor-in-chief, John Micklethwaite, Betsy Stevenson was making a very strong case that shouldn't happen, that Fed independence is so important. I want to get your perspective, sort of the market perspective on that. I think part of what she was conveying in her comments was the bond market in this country is propped up and fortified by the fact that the Fed has independence. Are folks like you thinking about this, worried about this? How much do you give credence to what the former president has been saying about taking on that kind of new advisory role were to be reelected?
Yeah, I do think central independence is extremely important, and bond markets are good at pricing that in. And so I think one of the reasons we have seen term premium rise with how the election might play out is because when you have political influence on a central bank, you should get compensated for that risk. And so, and particularly at the back end of the curve. And so I think you're starting to see that materialize, that if this rhetoric continues and actual actions take place regarding it, you should be compensated for more yield as a result of that, almost that going back and forth on different policies and what's the president saying versus what the Fed's doing. And so I do think that term premium has increased, and that's largely as a result of that.
I want to thank our good friend, Brij Khurana. He is fixed income portfolio manager at Wellington Management, undergraduate at Princeton, MBA at Harvard.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Your daily look at the front pages around the world. Lisa Mateo, what do you have for us today?
All right. Well, since David Gura's here, we have our political guru. Okay. So I found this story. Swing state voters apparently suffering from political ad fatigue. They are tired of it. Residents in the 7 battleground states, they've been hit with, the lawn signs, the billboards, the TV ads. But on top of that, they're getting the digital ads, social media. It's in their scroll. They're getting text messages. I know you've said you've gotten text messages.
It's now like 10 a day.
Do you get a lot of the Pennsylvania
crazy
stuff?
No, I just get 10 a day, mostly from Democrats, the party, for money.
Okay.
It's only 15 minutes
somebody's
left for
list.
somebody. I was like, oh, come on.
Yeah.
I know, but you're right.
So
Pennsylvania.
I want to ask Apple. So I always hit the delete and report the spam. Doesn't stop.
Doesn't matter, no.
Doesn't matter.
We'll work around that.
Yep.
Block the number.
Should I do that?
Yes.
Oh, okay. All right.
I've done
so
that.
I'll figure that out. All right.
Although another number will probably call
Yes.
you, but
exactly.
that's it.
But I mean, I just, I used to cover the television industry, and every 2 years when there's an election cycle, the TV stations make just gobs of money on political advertising, and it's a godsend to them. But it's not good if you're a viewer in those states.
No, and those states are just saying they're tired of it. They're done. I'm wondering if it's going to make them want to push not to vote.
Have the opposite effect, right? They're just tired
you
out.
think?
Irritated. I can see that.
Yeah.
So that was the thing over there. Okay, so we've been hearing the story about the E. coli with McDonald's and the Quarter Pounder. So now the restaurant industry is on this high alert. So you have other restaurants starting to do this. Burger King, Young Brands, a parent of Taco Bell, Pizza Hut, KFC, they removed the onions because that has been said to be linked to the E. coli outbreak. They're pulling the onions from their burgers. Also, Fat Brands that owns Johnny Rockets, other restaurants, they're doing the same thing. They're stopped using those Taylor Farm onions. But it can be costly for some of these companies. You remember the Chipotle outbreak? It cost them about $25 million, it says, to settle criminal charges related to outbreaks.
And it can last so long. I mean, it's a weight on the McDonald's stock now, obviously, but you look at Chipotle, that lasted for years. I feel like it was
What's
earnings
your
call after
go-to
earnings
meal
call.
at Mickey D's?
It actually is the Quarter Pounder with cheese, which I guess
It's
I
a
can't
number
get
2
now
with a
in
Coke.
several states across the country.
It's a number 2 with a Coke. See, I'm a nasty.
Oh, you know the numbers.
Yeah. It's a number. It's been my order since I was like 14.
Is that right?
A number 2 with a Coke.
Some comfort in that.
There is.
Yeah.
Exactly. Same thing with Hoagie Haven in Princeton. Cheesesteak hoagie, no tomatoes, but everything else.
Do you supersize it? That's the question.
No, please. Come on.
Everything in moderation.
Yeah,
for Paul.
exactly. Exactly, that's right. I mean, I go to McDonald's maybe once a year. I used to do, traveling in airports, that was your excuse to then
you had to do it.
Mickey D's or Burger King, because you're in an airport, you're rushing for a flight, that was your excuse.
Sure.
Now they don't even have fast food in airports anymore. It's all this...
It's all the fancy restaurants.
I don't know. They took that away from me. All right, what else?
Well, if you're feeling hungry, okay, so how about this? A hungry group of 10 people on Thanksgiving, you can feed them for $100.
Where?
Yes.
This is at Sam's Club.
Okay.
Okay, you
there
gotta go to Sam's Club. It's their Members Mark brand. So for $100, you can get a whole turkey, dinner rolls, mac and cheese, mashed potatoes, sweet potato mash, Brussels sprouts salad, and pumpkin pie.
The
so
whole
they're
thing.
saying it can be delivered to your house under 2 hours. It's pre-cooked. All you got to do is heat it up maybe in the
That
oven.
sounds like
Everything is set to go. They want to just make sure everyone has, access to good food. That's the reason why they're doing it. But a lot of companies have been doing this whole promotion, like
Prepared
Thanksgiving
meal.
cheap meals, because budgets are tight.
What do you do on Thanksgiving? Are you driving
I go to
that bus?
families. No,
You
I go to families.
Oh,
so
so
I don't
you
have
don't
to
host.
cook.
Good for
I bring
you.
the wine, and that's
You bring
about
the
it.
wine, exactly.
That's it.
I'll bring in the wine. That's a good strategy. All right, how about you, David? What do you guys do?
We'll be here in New York. Do some cooking, but it's farmed out among all of us. So I won't take care of the turkey, but we'll do some sides. And
Day after Thanksgiving, I'm working. Anybody else?
Not me.
I should check my calendar.
Yeah,
I feel like Mr. Keene.
See, that's how I do
Mr.
it.
Keene
So when
may
I
have called that one early. I'm not sure.
Mr. Keene.
Yeah.
So when I ask for all the Fridays off in the summer, I always tell the powers that be, hey, who's working the day after Thanksgiving?
Yes.
And
who's
Christmas
working
week,
Christmas
aren't you?
week?
Yeah.
That's how it works.
Okay.
So that's how you play it there. All right. So, but Thanksgiving dinner for under $100, not bad.
Yeah, not bad for 10 people. There you go.
Yep.
Okay, we've been talking about the World Series,
Yes.
right? Fever's in the air, but this is actually in the Wall Street Journal. It's how ballpark condos are a big hit with homeowners. So they don't want the ocean view. They want the view of the ballpark. So that's becoming a big thing. Unfortunately, not in New York or Los Angeles.
No.
They don't have those. But in San Diego, for example,
Great
they
ballpark.
have
park.
these
Great ballpark.
residences where you can just sit out on your balcony and watch the game. It's right there.
I can beat that.
Okay, how?
1995, we did the IPO for Speedway Motor Sports. They own the Charlotte Motor Speedway, the Atlanta Motor Speedway. Use of proceeds to build condos at the Charlotte Motor Speedway.
Wow.
In turn
At the
two.
Speedway.
And people
Sounds
bought
loud
them.
to me.
And people
I feel like-
bought they sold them out before they even built them. People wanted to have, they don't want traffic in front of their house, but they want
They'll take the
40
racetrack.
cars going 200 miles an hour in front of their condo
How do you-
at the Charlotte Motor Speedway.
I wouldn't. I live
It
next
was
to
awesome.
a train station. It's horrible.
Exactly.
Like, I don't want to live next to a speedway.
It was great. I mean, and so they, for 2 days a year when they have the two, what used
I
to be
guess
the
that's
Winston
right.
Cup
It's a
races.
regular, right? Yeah.
And then and people paid like $500,000
Yeah.
for these things.
I was in D.C. before here, and the kind of growth that you've seen around the Nationals ballpark in Navy Yard in D.C., just like that, all those condos around there. And then Paul and I love to talk about Durham, North Carolina. But that minor league park, the Durham
Yes.
Bulls Athletic Park, has a lot of that now. A lot
Yeah.
of condos kind of around the edges of it. So I get it. I mean, it's like,
Yeah.
if you're a fan, and we've talked about how much it is to watch the World Series, maybe this is like the future is to do it this way.
So maybe it's cheaper to do it that way.
Yeah.
But they're not cheap either. I mean, some guy paid $1 million for his.
In San Diego?
In the San Diego, and that was back in 2007.
Wow.
So you can imagine how much it cost.
That's a
condo
great
costs
ballpark.
now.
I've walked by it downtown, but never been inside. But it's
Downtown San Diego's it's a great. Why you would live anywhere other than San
Can't
Diego?
beat the
Why-
temperature
Yeah,
and-
it's just awesome. But that's a great ballpark. I think they support the team, so we'll see. All right, that's our newspaper segment with Lisa Mateo.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.